This is part of a 10-point program for stock market ownership. Step number 5. Revisit the decision you made in step number 3. You've taken the personality test in step number 1. You've watched the videos in step number 2. You've read the book in step number 4. Now you're going to determine whether you're on the right path so far. This would be a good time to do some research and consider that information as well. Look into the various financial markets to determine which you prefer. I primarily trade the stock market, but also have commodities or futures experience. That's actually the market I started trading in over 20 years ago. The main financial markets are stocks or equities with its options derivatives, bonds, the foreign exchange market or currencies, commodities with its futures derivatives, and physical assets like precious metals and real estate. Pros and cons. Historically, the stock market has averaged a 10% annualized return. That's not too bad, and if you load up your portfolio with dividend-earning stocks, that'll get you there. It's easy to access. Transactions are easy, but it is risky. It's volatile, and you are literally trading against hedge fund managers, professional traders, and institutional investors who have the time, tools, financial models, and computer systems that give them an edge. Therefore, you must find your own edge. The bond market is less risky, less volatile, and gives you fixed return rates, which can be nice. However, those fixed returns also can limit your earnings. They're less liquid, and it often requires a larger initial investment. The Forex market is a 24/7 market with a low initial entry investment and over 28 major currency pairs to trade. It can be quite volatile, however, with limited self-directed educational opportunities and 50-to-1 leverage, which can be both a blessing and not so much. The commodities market is known for what are called safe haven investments, most notably precious metals, and its expected long-term growth due to the connection between the human population and consumption. However, other than the relative security of investing in safe haven precious metals, the majority of commodities are known for their rapid price movements or their volatility. Precious metals like gold and silver are tangible assets that are portable, private, and confidential, and therefore not subject to online digital manipulation. They don't require any specialized knowledge to purchase and usually outperform the stock market. There aren't too many cons to this market. Physically storing them, however, can be a challenge unless you're investing in precious metal IRAs, which I do recommend. And finally, real estate investing. It can be time-consuming, and property management is not always pleasant. But monthly cash flow, tax advantages, and net worth increase are more than enough reasons to jump in at some point. And there you have it. Stay tuned for step number 6.